One of the top dividend-paying companies in the world saw its holdings in Warren Buffett's secret portfolio more than double during the third quarter. If you want to invest like the pros, we've got some good news for you. Institutional investors are required to report their trading activity every 3 months. This includes Warren Buffett and Berkshire Hathaway, the holding firm he's led since the 1960s. Even though Berkshire Hathaway's boss invests according to a successful formula, that doesn't mean sitting still. Therefore, you need to stay up to date on Warren Buffett stocks. Let's look into the recent screaming buys of Warren Buffett. According to the most recent filing, Berkshire Hathaway purchased Taiwan Semiconductor manufacturing shares for more than $4.1 billion in the third quarter. This is quite unexpected given Berkshire's lack of prior experience buying chipmaker stocks. Additionally, the sector as a whole has been reporting relatively low demand from producers of electronic devices. Why is TSMC stock so alluring to Buffett and Berkshire at a time when its industry seems to be in bad shape? Here's what regular investors need to know if they want to succeed like Warren Buffett, famously a contrarian investor who favors the long view. He frequently makes significant bets on cyclical companies at the more gloomy phases of their individual business cycle. The demand for electronic devices is currently relatively low, which is producing a slowdown in the semiconductor industry as a whole. For instance, semiconductor sales in South Korea fell by 29.4% during the first 20 days of November compared to the same time the previous year. Even if the semiconductor industry as a whole might be feeling under the weather, TSMC semiconductor foundries have advantages that keep them in demand. Few businesses, including this one, are able to make chips that are only 5 or 7 nanometers wide. TSMC reported third quarter sales that increased 48% year over year and 15% compared to the prior quarter, although the industry as a whole was slowing down. The competitive advantages of TSMC in producing smaller chip designs is about to increase significantly. The company's adoption of 3-nanometer technology has been pushed down by delivery issues with its tool supplier, but it anticipates beginning mass production at this size in the second half of 2023. The recent announcement that Berkshire is now a shareholder helped pull TSMC stock off its 52-week low, but at more than 40% below the top it attained in January, it still appears to be a good deal. The stock is currently trading for just 12.8 times anticipated future earnings. The present earnings multiple for TSMC is acceptable for firms with low single-digit annual revenue growth. The valuation of TSMC would make sense if it weren't well ahead of its rivals in terms of producing cutting-edge chips, but that isn't the case. Chip designers are still lining up outside TSMC to have their 5-nanometer products made, and they're even more thrilled about the company's ability to start producing 3-nanometer chips next year. TSMC reported third quarter net profits that flew 80% higher year over year despite a tough climate for the semiconductor industry as a whole. The company has a distinct advantage in the lucrative market for microchips that appears insurmountable for at least another 5 years, and maybe much longer. However, there are no guarantees that it will continue to dominate the competition. The American depository receipts issued by TSMC, which are essentially shares of a foreign company traded on U.S. exchanges, currently yield a dividend yield of 2.1%. Since launching an all-cash dividend program in 2009, the company hasn't increased its payout in its own currency, which will please investors. Markets may crash as a result of rising interest rates, which could push TSMC much lower than it has already been this year. Receiving a consistent income from quarter to quarter will make it much simpler to stick with it and generate enormous profits, as Buffett does. When all is considered, TSMC appears to be a very wise stock to buy right now. In addition to Taiwan Semi, during the Q3 bear market, Berkshire Hathaway opened holdings in Louisiana Pacific and Jefferies Financial Group. In a deal for approximately $297 million, Berkshire acquired 5.8 million shares of Louisiana Pacific, producer of building supplies and engineered wood products. It invested $12.8 million in about 433,000 shares of Jefferies Financial Group, a multinational investment banking and capital markets company. The price of LPX stock rose 7.8% on November 15th to 63.52, breaking through the 200-day moving average. JEF shares increased 2.1% on November 15th to 37.67. In the third quarter, Berkshire increased its holdings in a number of equities, including Occidental Petroleum, Paramount Global, RH, previously Restoration Hardware, Celanese, and Chevron. The Paramount stock increased 5.1% to 19.44. Berkshire reduced its holdings in other equities while selling store capital last quarter, 55% in US Bancorp, 14% in Bank of New York Mellon, 12% in Activision Blizzard, 5% in General Motors, and 4% in Kroger. An all-cash transaction estimated at $14 billion will see GIC, a major institutional investor, and Oak Street Funds buy Store Capital, a real estate investment trust. During a tumultuous third quarter, Buffett increased its holdings in Oxy stock by 35.8 million shares, according to a Q3 Berkshire financial report released on November 5th. But in order to find out more about the equities Buffett acquired and sold during the most recent quarter, investors awaited the 13F filing, which was made public on Monday, November 14th, after the market closed. After finishing Q3 in a bear market territory for a second straight quarter, the S&P 500 index has recovered since mid-October. According to the 13F filing made late Monday, Berkshire maintained numerous key positions in Warren Buffett's Dow stock-heavy portfolio in Q3. Apple, which had a market value of $123.66 billion at the end of September, was the conglomerate's largest stock position. However, according to the number of shares held, Bank of America is the top stock, while Apple is ranked second. Additionally, Buffett's largest stock holdings by the number of shares are American Express, Coca-Cola, and Kraft Heinz. Amazon is a smaller yet significant holding. In each of these securities, Berkshire kept positions last quarter. With his selections, Warren Buffett has a history of outperforming the market over the long run. The CEO of Berkshire Hathaway is known as a buy-and-hold investor who holds stocks for years or even decades. For instance, the corporation has owned Apple shares since Q1 2016 and KO stocks since Q1 2001. Investors follow Berkshire's 13F filings to learn where the legendary investor is allocating his capital in the stock market. Shares of a corporation may jump following a new Warren Buffett stock purchase. Warren Buffett outspent stock sales by $3.7 billion in the third quarter, including $2 billion invested in Oxy stock. An investment in Occidental Petroleum or Chevron is a bet on oil prices. Their fortunes fluctuate along with the price of crude oil. Oil prices have increased during the previous 12 months. After Russia's invasion of Ukraine, crude rose into the $120 range after beginning the year in the mid-70s. Since then, crude prices have decreased due to macroeconomic worries, but they're still about $90 per barrel. This enables the oil industry to generate a torrent of cash flow. While it's unclear where crude oil prices will go from here, there are reasons to think they could make a significant comeback. Even if the company collapses, a number of factors, including OPEC, equipment shortages, and supply problems, could push oil back towards $120 per barrel. With the Biden administration progressively depleting the Strategic Petroleum Reserve to relieve pressure on gasoline prices, there isn't much room for error in the oil market these days. Because the nation's reserves are at their lowest level since 1984, a small supply problem could result in a significant increase in petroleum prices. That would provide the fuel for Buffett's oil stock bets to continue increasing. Additionally, Berkshire Hathaway spent $1.05 billion buying back its own stock. Berkshire suffered a $10.5 billion loss on equities investments during the turbulent third quarter. Between the end of June and the end of September, its cash reserves increased from $105.4 billion to $109 billion. Berkshire has accelerated its investing activity thus far in 2022. Following the Russian invasion of Ukraine on February 24th, which affected the world's oil and gas supplies, it significantly increased its energy bet. As the stock market rose in 2021, Berkshire Hathaway mainly played defense. On November 15th, a 0.4% increase in B-class shares of Berkshire stock to 309.98. In today's pre-market trading on the stock market, shares were steady. One analyst claimed TSM stock is as high quality as it gets and defines long-term buy and hold when news of Berkshire's takeover of Taiwan Semi surfaced on November 14th. Buffett has earned a reputation as a buy-and-hold investor who holds onto stock for many years, if not decades. However, there's been a lot of change recently. Shortly after initially purchasing AbbVie, Bristol-Myers Squibb, and Royalty Pharma, Berkshire Hathaway sold them in 2022. The conglomerate sold its shares in Biogen, Merck, Teva Pharmaceuticals, and Merck spin-off Organon in 2021, all of which were pharmaceutical companies. In 2020, Pfizer and Barrick Gold were purchased by Berkshire, who then rapidly sold them. In light of the coronavirus's impact on international flight levels, it also sold off Costco and all of its airline equities. General Electric, USG, IBM, and Berkshire all announced their exits from the market in 2017. Top Buffett investments typically have increasing dividends. Take Coca-Cola shares, which Buffett started collecting in 1988, and whose dividends have increased 61 times in a row. With dividends taken into account, the well-known Berkshire Hathaway portfolio achieved a 20.1% compound yearly gain between 1965 and 2021. which is nearly twice as much as the S&P 500 index. Despite these excellent attributes, shares have recently been trading at low valuation multiples, which is likely what prompted Buffett to start a sizable position in the business. The content in this video is for educational purposes only and hence should not be considered as financial advice. Do conduct your own due diligence and consult your financial advisor before making any investment decisions.